Hi, my name is Michele. I am currently on the road to being a funded trader. I wanted to document my journey. My trading strategy is based on price action. In fact, it's based on structure, which is based on the candlestick close simply. So we see the candlestick closes. This is a high and this is a low. Then my strategy is also based on the hyperbole entries, and that is simply standard candlestick analysis. I also use support and resistance. Support or resistance is established when we have three touches or more, and psychological levels. So usually these many touches, they happen on psychological levels, so I really like to use psychological levels. I don't always use psychological levels, but most of my trades are based on psychological levels. I also have extra confluences, for example, a simple moving average. I also have exhaustion as a sort of confluence. So for example, here we have seller's exhaustion, where sellers pushed price all the way down to 100 and 100.6, but because of seller's exhaustion, because buyers bought all the way back up the price, this is a certain confluence that is indicating to me that the price will continue to be bullish. We also have time frame correlation, which is my last sort of confluence. And there are two types of time frame correlation. There's the close of a candle that also is at the close of the higher time frame candle. For example, when a candle, for example, this candle closed at 1815, what other candle closes at 1815? Well, it's the 15-minute candle that closes at 1815. So we can see this, we can use this for the H1 and the H4. We can use this for the 5-minute, the 15-minute, and the 30-minute, and on and on. And also, the second time frame correlation is, of course, the overall trend. So most of my trades are with the trend, of course. Sometimes I do take counter trends when they have a lot of confluences. But that is basically my strategy. My first trade on this account was actually a losing trade. Didn't lose much, but here we went over the zone. We also had 30-minute time frame correlation because this 5-minute closed with the 15-minute, which was bullish engulfing, and the 30-minute, which was bullish engulfing, with seller's exhaustion and break of the 30-minute SMA and break of the resistance and psychological level. But what I didn't account for was the retest. So what I need, my strategy says this, that I need a retest and then a break of this level, this 5-minute structure, to then buy. So if this had happened and we had, for example, a hyperbole entry like a bullish engulfing, for example, then yeah, I would have entered to a possible TP of this and a stop loss that is under this H1 zone, right? So, but it didn't. And this was a mistake of the trader and not of the strategy. And price went all the way here. I was stopped out. And then price did exactly what I should have looked for, which is a break, retest of the zone, and then break of this 5-minute structure, which I just said. As I put the line here because the structure is based off the candle close and not from the wick. So here this would have been a buy, and here we would have gotten some profit. Not much, because our TP would have been up here, but we would have gotten some profit and we would have closed out before the week close. Thank you very much for listening, and this is my first video.